Hi there, and welcome back to the Metaverse Stock Exchange. In this video, we're going to do a quick recap of what happened in yesterday's Fed meeting, in the press conference, and why markets took off in the late hours of trading. Let's dive right in. So first and foremost, a 0.25% interest rate hike, which was as expected, and right now the Fed interest rate is at 4.75%. So this part was very expected. What wasn't expected was the second row, which is ongoing hikes will be appropriate. And that's the S here is very important because the market was thinking that either we're going to stop right now or maybe one more interest rate hike in the March meeting. But he definitely repeated this multiple times. It was in the statement and in his answers that ongoing interest rate hikes, meaning multiple rate hikes. He got a lot of pushback on that, and he definitely said that we will be getting like 25 basis point hikes, so no more of those 50s or 75s. So that's kind of was taken as good news. The next point is kind of associated with this one because he was then pressed on when they plan to stop. And he answered, we don't know when we will stop. So he was also asked, maybe, would you stop for one meeting and then hike the next one? He said that that's something that they have not asked so far. So definitely, as of right now, we are seeing another interest rate hike, the next meeting, and probably one more after that. But he definitely kind of doubled down and said, we're going to look at the data, we're going to be data dependent, and we will see when we will stop and how long we will be there. So definitely a lot of pushback, but his tone was definitely a lot calmer. I have a point on that as well, downwards. So next point here, if the data comes in lower, then we can see lower rates in 23. This was again something he definitely got a lot of pushback from reporters, many questions on, okay, you're still hiking, why are you not waiting to see the cumulative effects of what you've done so far, and would you see rate decreases in 2023 because the market is expecting this. And he kind of dodged the question a couple of times and then later on answered and said, hey, if inflation comes down, if the data is much better than what we're seeing right now, we could see interest rate decreases in 2023. This was pretty much the first, when he said that the first time, and when he used the word deflation the first time, I think that's when the markets kind of took off. So those were the two key moments right there. Okay, next point I have here. So this is when he started explaining inflation. So he said, goods inflation is going down. That's very good. And this is something that he has been saying for multiple meetings now. Next one, he said that housing inflation is expected to go down in the summer months. So as I noted in my previous videos, how the CPI measures housing inflation is very lagging. It takes an average of 12 months, whereas we have the pretty much the data right now for the latest months, and we can see that the latest months we have decreases in inflation. And that's why we're definitely expecting housing inflation to go down. We're pretty much seeing that right now. It's just the data needs to catch up. So these two parts are really good. What is not good is this here, and that's why I have it in yellow. It says services inflation X shelter most important, because we have not seen kind of deflation or prices going meaningfully down in this part of the CPI. And keep in mind that services is the bigger part of the CPI. So goods is a smaller part, services is a bigger part, housing is the biggest part of services, but then in the services X shelter, which is X housing, we have like restaurants, like all kinds of services, whether it's attorney, financial, whatever it is. And these are very kind of dependent on wages in how the economy is operating. So if people are spending money, it is more likely that service prices will go higher. But if the kind of economy slows down, this sector is hit very hard, or at least is expected for prices to cool down. But as he noted, they're going to be fighting inflation until he sees or they see meaningful decreases in this sector. So this is the most important sector to watch: services inflation x shelter. Next one is disinflation mentions. I mentioned this a couple of points earlier, but this is when the markets first took off because he purposely used the word disinflation many times, like many times. He was even asked about it, he was pushed about it, and he definitely used this word on purpose to say that, hey, what we're doing is working and there is results. We're just waiting for kind of the services sector to catch up, but there is definite progress in what they are doing. So that was a key market moving event right there. The next one, it was a market going higher, is not something they are looking at. Okay, this was a response to a question. Hey, and this is something I alluded to in my video yesterday, because financial conditions are loosening up very much. Because what does that mean? Stocks are going higher, bond prices, the 10-year note is lowering, which that is pretty much loosening of financial conditions and just people having more money. That's not something the Fed wants to have, because if people have more money, they're going to spend more money and prices are going to continue going higher. So pretty much it's contradictory. But if stock prices go higher, it's not something that the Fed really wants when it is in financial conditions. And that's why he was asked, hey, like stocks are going higher. It's been a really good January, even from your press release, which is at 2 p.m. Now at 2:30 p.m. when he was being asked these questions, the market has reversed. It's being up right now. Is that something that you're looking at? And he said that is not something that we're purposely looking at, but he kind of gave a dodgy answer. We're looking at everything, so and so. But he had an opportunity to kind of bag on the market, to push back on the market, and especially that question was a layup for him if he wanted kind of to say what is happening in the markets is not something that is good for us, or that the market is going ahead of itself. That's something that he has said in the past. He purposely did not say that. So all in all, it was a kind of, this was another moment when stocks continued to go higher. This is something I mentioned as well. Very calm in his statement giving. So previously, there were times when he was really kind of up there and sending a message that we're serious, we're gonna fight, we're gonna. You could see it in his tone and how he was reacting, that he really wanted to send the message, hey, we're going to do everything to kind of lower inflation. Yesterday, you didn't see that. He was super calm, very kind of sending the message that, yeah, we're going to do everything, but kind of winking and nodding that pretty much we're at the end of the tightening cycle. And again, that is another reason why the market was going higher. Next point was markets heard what they wanted to hear, and that is pretty much correlated with this, and they took off. And that was really true because, yes, there was a lot of hidden messages here. He did mention disinflation. He was calm. He said that we can see rate decreases in 23. So there was a lot of good news in here, and that markets was hearing. But realistically, he also said that we have interest hikes coming. He said that I do not see interest rates going down in 2023. So that's something that after he said, hey, they might go down if the data is super good, but I don't see that happening. So he really towed a fine line and said everything that the markets wanted to hear, but at the same time didn't kind of sway away from his messaging. His messaging is still, we're going to do everything. We're going to raise interest rates. We're going to tighten financial markets. We're probably not going to lower rates in 2023. But at the same time, giving kind of, let's say, a hidden message, a message that the markets wanted to hear. And that is why they pretty much took off. So we will see if the move is sustainable. It looks like it right now today. We're gonna get a employment data tomorrow. We're gonna see that a CPI comes in 2 weeks from now. That's gonna be a huge market mover. But for right now, it is good news for the markets and a very good Fed press conference because he said what he wanted to say. The markets heard what they wanted to hear, and everybody kind of seems happy from it. Thank you for watching, and see you in the next one.